What happens when one of the world's most powerful central banks can't even raise interest rates by 0.25% without causing market panic? In this clip from the TFTC podcast, Preston Pysh explains exactly why the Bank of Japan's recent actions reveal deep problems in our global financial system. Preston is a financial analyst, investor, and host of the Investors Podcast. He spent years studying monetary policy and has been particularly focused on the intersection of traditional finance and Bitcoin. His insights have earned him a reputation as one of the clearest voices explaining complex financial concepts to everyday people. Today we're going to explore three critical developments. First, we'll see how central banks have lost their ability to coordinate global monetary policy. Then we'll examine why the Bank of Japan's failed attempt to raise rates by just 0.25% reveals systemic problems. Finally, we'll understand why these issues in the traditional financial system make Bitcoin's fixed monetary policy more important than ever. Before we continue, if you enjoy this type of content, hit the like button and subscribe to stay updated with the latest from the TFTC podcast. You can find the full episode in the description. While many analysts talk about markets in complex terms, Preston breaks down exactly why central banks are trapped, and he explains it in a way that makes sense even if you're not a financial expert. Let's dive in.
This is something else that's changed just like very recently, in my opinion. You used to have complete global cooperation between central banks because it benefited all of them collectively to continue to, hey, you know what, you debase your currency for the next year, we'll allow ours to tighten. And then after that, Jim Rickards would use this analogy with you're passing the canteen around the campfire kind of thing. Like you can take a hit and then pass it, and then the next person's going to take a hit. Now you're in a situation where the Bank of Japan and the U.S. Fed, both of them are saying we need to drink from the canteen at the same time. We can't even afford for you to take a sip. We need to be sipping out of this somehow at the same exact time. And because if we don't, we're both going to die.
What Preston just described is a fundamental breakdown in how central banks operate globally. Think of it like this. For decades, central banks would take turns implementing their monetary policies. One would tighten, while others would loosen, keeping the global financial system in balance, like friends passing a drink around a campfire, as Preston puts it. But now, that system is breaking down. The Federal Reserve and the Bank of Japan are both desperately trying to implement similar policies at the same time. It's like everyone at the campfire trying to drink from the same canteen simultaneously. It just doesn't work. This is unprecedented and shows just how stressed the global financial system has become. This is particularly important because it signals that central banks are losing control. They can no longer coordinate their actions to manage the global economy effectively. Their traditional tools and methods of cooperation, which have been the foundation of the global financial system for decades, are failing. When central banks can't work together, it creates instability in the entire financial system. And if you think this sounds concerning, wait until you see what happened when the Bank of Japan tried to make even a tiny change to their interest rates. Their actions revealed just how fragile this system has become.
And so think of it how in the world is that possibly even remotely a free and open market when you're basically telling the buyer of that to sign up for a guaranteed loss of, close to 3%. And that's being generous. And I think they're also looking, that the buyer of that is looking everywhere else in the world and they're saying this inflation isn't going away. And yet they can't even raise 25 bips. As you know, the bank came out and said, when things aren't stable, we're never going to raise rates. well, they raised rates when things were quote unquote stable. So what kind of statement is that? It doesn't even make sense.
What Preston is highlighting here exposes just how broken the traditional financial system has become. The Bank of Japan tried to raise interest rates by just 0.25%. That's just 0.25%, and it nearly crashed their markets. Think about how absurd this is. One of the world's largest economies can't make even the smallest adjustment to their monetary policy without risking a market meltdown. When you buy government bonds, you're essentially lending money to the government. Normally, you'd expect to make a profit on this loan. But in Japan, investors are being asked to accept guaranteed losses after accounting for inflation. No rational investor would accept this in a truly free market. This is what happens when decades of money printing and artificial market manipulation reach their logical conclusion. This situation perfectly demonstrates why Bitcoin's fixed supply and automated monetary policy is so revolutionary. While central banks are trapped in a web of their own making, unable to make even minor policy changes without causing chaos, Bitcoin continues to produce blocks and maintain its monetary policy regardless of market conditions or political pressures. And speaking of political pressures, what Preston reveals next about market manipulation during election years shows just how deep these problems go.
I think so much of it comes down to the US election. And some of this opinion is because I think markets are so manipulated, right? So I think that when you look at the current administration, and I think that going into November, the last thing, they cannot have havoc in the markets. That's why this hole got plugged so quickly. I mean, it was like the impairment and the sell-off that was happening was like literally setting records and stuff there on Monday. But then lo and behold, the next day, the Japanese market bid 10%, like right back to where it was. Like, so these markets are, if you think you're playing a fair game here in the traditional system, you are not. Congratulations, you're not.
The market manipulation Preston describes here is staggering. When there was a significant market sell-off, it mysteriously reversed overnight with a 10% jump in Japanese markets. These kinds of movements don't happen naturally. They're the result of behind-the-scenes intervention, especially heading into an election year where market stability becomes politically crucial. This manipulation perfectly illustrates why we need Bitcoin. In the traditional financial system, markets can be moved up or down at will by powerful institutions and political interests. Regular people are left trying to protect their wealth in a system where the rules can change overnight based on political needs. Bitcoin fixes this by removing the ability to manipulate the monetary supply or policy based on political convenience. Its rules are transparent and unchangeable. Whether it's an election year or not, Bitcoin's monetary policy remains the same. No emergency printing, no bailouts, no overnight manipulation to save politicians from market realities. And if you found this breakdown of central bank coordination fascinating, you'll want to watch our previous video about how Bitcoin could hit $10 million. We explored how Tether is using government debt to accumulate massive amounts of Bitcoin, and how it connects directly to the failing monetary policy we discussed today. Click the video on your screen now to understand why this could be the perfect storm for Bitcoin's price. Can central banks actually work together anymore? Or is the system completely broken? Let me know your thoughts in the comments below. I read every single one. Don't forget to hit subscribe to stay ahead of these crucial developments in the future of money, where we break down these important stories every week. Stay humble. Stack sats.